Very good afternoon to you. China has announced it will introduce 34% retaliatory tariffs on all goods from the United States, hitting back at Donald Trump's action earlier this week. It comes as markets continue to tumble. The FTSE is currently down and America's Dow Jones index suffered its biggest one-day loss since the early months of the pandemic. In a statement, the Chinese Finance Ministry said the following: the United States' imposition of so-called reciprocal tariffs seriously violates WTO rules, seriously damages the legitimate rights and interests of WTO members, and seriously undermines the rule-based multilateral trading system and international economic and trade order. It is a typical unilateral bullying practice that endangers the stability of the global economic and trade order. China firmly opposes this. Well, our economics and data editor, Ed Conway, has the latest.
Yeah, I think if you were in any doubt that we are now in the midst, engaged in a trade war, rather than just talking about the potential of one in future, then that has been dispelled. Perhaps today, but perhaps a couple of days ago when we heard from Donald Trump in the White House. The fact that China has retaliated with these tariffs, which are designed to be precisely the same level as the tariffs, the extra tariffs that America has put on China. Worth saying, those tariffs that Donald Trump just added to China and obviously other countries around the world, these so-called reciprocal tariffs, they were on top of an existing 10 and then 20% extra tariffs on China. So the total amount of extra tariffs that China is facing are now kind of up in the kind of 50% level. The fact that China is retaliating really kind of underlines that we are now seeing this tit-for-tat trade war around the world with tariffs. These incredibly potentially damaging taxes being levied on all goods that are being imported into these countries. It is, for most economists, for most investors, for most businesses who look at what's going on in the world, a very scary time. And I think that's what's borne out. You know, the moment that we got that news about China imposing those retaliatory tariffs, you saw markets, and when I say markets mostly in Europe at the moment, because those are the ones that are open and trading, but also futures markets for the US falling sharply, and they've already had sharp falls after that Rose Garden event, down by about 3.5% immediately after that announcement. And this is people reacting to the fact that many of their worst fears about the notion of a trade war are actually coming true. It's actually happening right now. And obviously, you know, the best case scenario I think that a lot of people are still clinging to is that this is all just the beginning of a long period of negotiation, that China's going hard, that America's going hard, and eventually they'll negotiate and we'll end up with something where goods can get from one side of the world to another relatively cheaply. But in the short run, this spells a lot of pain, because in order to get to that point, you've got these trade barriers being lifted around the world. And as for what the UK does, well, so far, still, I mean, that consultation has gone out about whether the UK is going to retaliate, but so far the message from government has been that we are going to act calmly. We're not going to respond in a knee-jerk fashion like China or indeed like the Eurozone have recently. And they are thinking about it. But even as they think about that crisis, there are other crises that are happening at the same time. So partly as a result of those tariffs on metals that the US has introduced, a place like this, British Steel here in Scunthorpe, is getting really close, is measuring out its future within days rather than months or indeed years. And that's another thing that Jonathan Reynolds, the business secretary, has to deal with. So all of these crises which converging on the UK and all around the world seem to be happening at once. And I think that's the scary thing. It's all happening all at once, out of nowhere, really. You know, we've had a kind of period of crises, COVID, Brexit, all the rest of it. And now this feels like this is going to be the drama we're going to be talking about for quite some time.
Time to bring in our business correspondent, Gurpreet Narwan. And Gurpreet, the FTSE falling, British banks battered today. It's really not looking good on the stock markets to end the week, is it?
That's right, the FTSE down 3.9% now. Its lowest level since December, after recording falls of 1.6% yesterday, and that comes on the back of routes in the financial markets in the US. The S&P 500, one of the core indices in the US, $2.4 trillion was wiped off that indice. So you can see the scale of this, but on one level, it's perhaps not a surprise that markets have responded violently. Donald Trump has, after all, ratcheted up protectionism in the US to a level that we haven't seen in over a century. That was always going to provoke a reaction. I think what we're seeing now, though, however, is that markets feel that Donald Trump has perhaps gone further than they were expecting. And we've seen over the past few months that traders have been sort of recalibrating their expectations of how far they think Trump may go, whether his actions are going to match the rhetoric. And the response from the financial market suggests that they're now really worried about the risk of a recession, not just in the US, and fears of a recession in the US are weighing on the dollar, which has fallen to a 6-month low, but also the global economy around the world. And we've had some economists ripping up their forecasts for where growth might come in this year. We've had some saying the recession risk in the US is now 60%. In the UK, economists saying that growth could fall to zero with a huge risk of recession. And of course, that has massive ramifications for a government that is trying to eke out economic growth wherever it can, eyeing up potential tax cuts and tax rises rather, and spending cuts to shore up an already fragile set of public finances. So the question then is, how far could this go? How far could this route go? On some level, you could say that by clarifying some of the uncertainty that was lingering over how Trump may respond with his tariffs, that may have assuaged markets over the last couple of days. But actually, there's still a huge amount of uncertainty lingering over how far Donald Trump is willing to negotiate, over how far he's willing to offer concessions, and to what extent countries retaliate. We've already seen the response from China, the response from the EU, and if this continues to snowball, that's only going to be more damaging for the global economy, not only for growth, but also for inflation. And that is the toxic mix that is weighing on financial markets at the moment, meaning it could go further.